Good morning, good afternoon, and good evening, guys, and welcome to another video of the Diamond Trader. My name is Daniel, and today, guys, we're doing the fourth video of a series of videos that I've been doing, and we're looking at how to find value stocks. Okay, this is a series of videos that I'm making. I have a playlist, so those of you that don't follow my channel, if you can go into my playlist and you can see the other three videos I've done quite recently, in fact. So, how to find the best swing trades, which is for your short-term traders, how to find the best growth stocks, which again is useful for your long-term investors, and how to find the best penny stocks. So those of you who like to take that risk, it's a great video to be watching as well. But today, guys, we're looking at how to find value stocks, and this is really important for the long-term investor. And this is really a step. This is a initial step that we take. It's a screener step that we take before we actually go in and analyze the company in detail. So we're not going to analyze any particular company in detail. We're just going to look at how we can screen, filter out the companies that look appealing, so we can go on and do further investigation. Okay, so I'm not a financial advisor, so everything I say in this video is from my own personal opinion. Please don't forget to hit that like and subscribe button, guys, because that really helps with my channel. So let's get straight into it, and let's have a look at what we're looking at. So the first thing we're going to do is go to Finviz, so finviz.com. And in fact, for this, guys, I'm going to take away my camera so you can see the screen as a whole. So let's get into it. Let's have a look. So Finviz, guys, is a tool that I've used on all the series of videos because I think it's great. I would suggest that you go in and have a play with it, and yeah, so let's have a look to see what we have to do first. I've said on the other videos, and the other three videos regarding how to, is to make sure you go in and register. Okay, so I'm registered, as you can see, as a Diamond Trader. It's free, okay, and the reason why I say it's good to go in and register for free is simply because when you go to see your screener, which is what we're going to look at now, you can save your screener, so every time you go in, you don't have to configure that type of screener. Okay, so let's see what we mean. So I go into screener now, for example, and I click and I'm in Diamond Trader. I then have all the types of stocks that I want to be looking at. Okay, so today, guys, we're going to be looking at value stocks. So let's get into it. So first things first, let's have a look at Finviz. Let's have a look at the market cap. The market cap, in fact, is up to you. Okay, you can have a look at the market cap of over a large market cap or a smaller market cap. I like to look at a market cap which is a mid one over $2 billion. Okay, so that's the rule. You can, I don't know, for example, let's have a look. We can actually go in and have a look at small, micro, nano, but these, again, you're looking at, these are penny stocks, so really you're not going to find much. It's very difficult to filter out a value stock here. They're really not considered a value stock. I would consider a value stock that's over $2 billion. Okay, so that's the reason why I click on that. So let's go in order. Then the PEG ratio. Okay, so the PEG ratio is the price to earnings to growth. Now, one would suggest that why don't you just select that, because that would just give you the idea of an undervalued company. Okay, it's an indicator, and it's a very useful indicator, but we cannot just go by PEG ratios, and we cannot go by PE ratios, for example, price to earnings ratios. Every industry has its own PE ratio. Generally, if we have a look at the S&P 500, for example, it sits around about 23, 24, the PE ratio. So one would say that under 25 as a PE ratio is undervalued. Again, this is not true, entirely true all the time. It's an indicator only. Also, it could suggest that if a company that has a real low PE value ratio could actually be in trouble as well. So it's important to know that. So we're going to click on, I'm going to leave the PE ratios on this one. I'm going to go straight to PEG ratio, and that's less than 1. 1 would suggest that the company is fairly valued, and below that would be undervalued. Okay, so that's what I use. Okay, the next one, sales to growth over the five years. I do want to see some growth over the 5 years, and I use 5% over 5%. Return on equity, I want to at least see over 5% or above. Okay. net profit margin, I'm looking at least over 10%. Again, you can configure these to how you wish. Okay, this is my own personal preference, and you can change them. If you're playing around with this and you're having a look at all these sort of filters, the many that there are, you can actually just scroll over the top and you can actually see what each one refers to. It gives you a little bit of information what it's about. For example, payout ratio. You're like, well, what's a payout ratio? It's the percentage of earnings paid to shareholders in dividends. So if you're a dividend investor, this is a great one to use. Okay, so just give you an idea. So let's go straight into the next one. We're looking at debt to equity. We want that under 1. That would suggest that the company's leverage is good. So they would have at least enough equity to cover their debts. Okay, so I don't really like to see a company with a lot of debt. Gross margin, I'm looking at gross margin over 30%. Okay, so you can configure that one, so you can actually go 100 over 20%, for example. And then we're having a look at the next two, which is the operating margin. Okay, the operating margin, which is under 25%. And then we have the current ratio. Okay, so the current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations. So it's calculated as current assets over current liabilities. Okay. So yeah, again, that's not necessarily that's one I've put in, but if you want, you can take that away, and it'll probably give you more of an option. So there, we have our results. Now, once you've done this, guys, once you followed me on this video and you've done these, what you go is you go into save screen. So if you've registered, you go into save screen, and then what you can do is you can put the name of your screen, okay, whatever you want to call it, and save it. Okay, so I'm not going to save it because I already have it. Okay, so yeah, so that's the screen, and so there's our screener. Let's have a look. So then we're left with a bunch of companies. There's actually not that many. Having a look now, it wouldn't suggest, and I'm not suggesting that these companies that you go out and buy now. And in fact, because we've really leveled this down, narrowed this down to 5 companies, it's probably worth investing and having a look at each one in detail. Okay, obviously it depends on what type of industry you want to go in. For example, I'm quite interested, for example, in the biotechnology and the semiconductor industry. So this is really two of the industries that I'm actually quite keen on at the moment. So I would probably choose these 2 companies just at a glance, guys. So I'm not saying that I won't go into these, but just at a glance, these sort of pop out to me. So I may have a look. Now, what I would do is I would click on the ticker. So let's click on the semiconductor company here, and I would start to have a look at graphs as an outlook. Okay, I'll have a look at the graphs, see what the price is doing, what it's been doing. And again, what we can do is then go down, and I can actually relate and have a look at some news that may have just been recent, which might actually catch my attention. Okay, so this is really the sort of things you look at when you're doing your DD. So your DD, you would start to look at you would actually go on and you would follow my 10-step process. So I've already made a video on that, and that's really part of it's part of a 10-step process that I use to when I'm investigating companies. I'm looking at companies, so I'm looking at their revenue, looking at profits. I want to see improve a lot of valuations, which I'm not going to go through on this video. You can check my video on that one, the 10 steps to find to evaluate stocks, I think it's called. So I'll leave the link in the description. And what I start to do is I start to go into the company's investors relation. Okay, so let's just take, for example, this one. Let's just give this one as an example. So I'll take the name of this company. Let's say I've glanced on it, had a look at it. So now I'll just go in pretty much into Google, right? As we all do. Okay, and then I'll go onto their webpage, which is this one here, for example. And then I would start to look at where they are, where's their investor section. So let's have a look. So here we are. So we go into here and we have investors relations, and then we have, so we've got all the information, and here we've got presentations. I like to go straight into the presentation, start to look at the SEC filings, which gives me an idea, feel of the company's numbers. Okay, so numbers I want to be looking at. Again, I'm not going to go into details, but this is the first step, guys, that I take. Then I'll go straight into my 10-step process, look on the articles, and to decide whether I think this company is one for me for the long term. Okay. So guys, that's a little bit on how I find value stocks, guys. I really hope you found this useful. If you found this useful, don't forget to give me a big thumbs up. This really, guys, this really helps me with my YouTube channel, helps with the YouTube algorithm. And don't forget to subscribe if you're new to the channel, guys. Thank you very much for watching. And by the way, leave me some comments down below. What do you think of this? Do you like this? Is this new to you? Do you use FinViz? Have you learned something from this video? I'd really love to hear what you guys have to say. Guys, thank you for watching. Take care, and I'll speak to you soon.